Hello, Tete. Can you begin? Yeah, can you start the moderation? Yes.
Okay. Right. Hello, good afternoon, everybody from Accra. My name is Tete Homeku, and I'm head of programs at the Third Network Africa based in Accra. I have the immense pleasure to welcome you all to this side event on towards a new economic architecture that works for the people and the planet. The context of this summit and this side event, as we all know, is the COVID-19 pandemic and the devastating economic and humanitarian fallout, which we are all experiencing. In this context, no one can deny that we are in a very critical conjuncture in the global economy. Nor can we deny that it's a juncture that requires has brought us systemic failures, inequities which has only been highlighted and accentuated by the COVID. The Civil Society Finance for Development Group, which have put together this event, is very clear that we need systemic solutions to the systemic problems that have been exposed. Equally importantly, it is clear that we need a process that includes everybody and every force in every country at the decision-making table. It is for this reason that the Civil Society FFB Group has called and been calling for a United Nations Summit on international economic reconstruction and systemic reform as a key forum and mechanism for the people of the world to begin to chart a path out of the current crisis. For this side event, we are going to focus on an important dimension, the substantive set of issues that need to be addressed, and this relates to the question of finance and the systemic challenges that finance as it's structured today globally poses to the ability of countries and their people to take the kind of action that meets their needs. We pay attention in particular to three elements, one of which is the question of growing debt, and at the same time, the related question of the collapse of tax revenue and the issues of tax justice and debt justice that relate to it. The second question relates to the central role of the state to any system of finance that is both sustainable and just. And in particular, we're dealing with issues of financial regulation, and more equally importantly, the question of financial institutions that are important for activating resources, especially public development banks. And the final issue we're looking at is private finance. And here we're looking at the challenges posed by private finance and how private finance can be part of a system that is both coherent and equitable, rather than as we are now, the short-term profit motivation of private finance actually taking the system apart. We've got three, but now two excellent speakers who will be dealing with these issues. These are excellent speakers who, as I would say, are very accomplished activist intellectuals. And by that I mean that Kavaji Singh and Maria Jose and Lee Dinakpi, who are supposed to have joined us, they're all individuals who have very good and total grasp of the issues at stake, but even more importantly, have got a lot of experience in the challenges of political mobilization that's required to take action. I understand that Lydie, who is supposed to join us for one of the sessions, will not be because they're having problems of interconnection because of Philippines. I'm not going to try and spend any more of the time we have left trying to introduce our speakers, but I will urge them that when they speak, they can also say a few words about themselves in order to set the context within which they speak. So I think I would call upon Kavaji Singh to lead us in the conversation. Thank you very much. Kavaji, the floor is yours.
Thanks, Tete. For those of you who are not familiar with my work, I work with a policy research institute based in New Delhi, India. The name of my institute is Madhyam. Let me first thank the organizers for giving me this opportunity to share my perspectives on public development banks. I will talk about public development banks that operate at national as well as at subnational levels. In short, we call them NDBs, the National Development Banks. In the aftermath of the 2008 global financial crisis, we are seeing that the policy pendulum is swinging in favor of development banks and more broadly towards state intervention in the economy. And the COVID-19 pandemic has further added a momentum to this swing. So post-crisis, in the last 10, 12 years, we are witnessing that some big emerging economies, as well as some developed economies, they are setting up new development banks. But there are a large number of low-income countries, poor and developing economies, which currently don't have such developmental banks. They used to have national development banks earlier, but these were either privatized or turned into commercial banks in the 1980s and 90s under the structural adjustment programs and under the new liberal economic reforms. If you ask me, I would say that all countries need national development banks, but their potential is far, far greater in the poor and developing countries. In these countries, NDBs can finance SDGs, they can finance physical infrastructure, they can also finance the social infrastructure, and they can also help in the fight against the current COVID-19 pandemic. How they can do that? Let me give you an example. Let us assume for a moment that a vaccine, a COVID-19 vaccine is approved next year. So what would be the next step for the countries, especially the poor and the developing countries? They will either have to manufacture this vaccine or they will have to import it from other countries. These countries will also have to create warehouses, cold chain infrastructure to distribute that vaccine throughout the country. They would also need large number of medical professionals, to inject, to administer the vaccine. But if the procurement and distribution of vaccine is not profitable due to price control or any other regulation, private commercial banks may not be willing to finance such businesses. As we all know, COVID-19 is a matter of life and death. A vaccine is very, very essential to save people's lives as well as to help in the quick economic recovery. So in such situation, countries can't wait. In my view, they should set up development banks who will finance and invest in such businesses, even if it is not a profitable activity. Why? Because profit making is not the sole objective of development banks. They combine profit making with meeting wider social and developmental goals. Unlike private banks, NDBs have a public policy mandate, and this is very important, which means that they can invest in local communities, they can invest in small and micro businesses, they can support a wide range of neglected sectors of economy, they can also support industrialization and economic activity in the backward regions of a country. And NDBs can also strengthen the financial stability by playing a counter-cyclical role during a financial crisis. And we have already witnessed this during the 2008 financial crisis, In countries like Brazil, Mexico, Germany, India, Poland, we saw NDBs increase lending to kickstart the economy, which was badly damaged during the crisis. And I'm of the opinion that we need to reimagine the role of national development banks in the 21st century. In the 20th century, most NDBs were dealing with the credit market failures. But in the 21st century, I think their role could be much bigger. They could be the natural partners to tackle big societal challenges such as climate change, food security, inequality, and inclusive growth. But I must also say that despite their great potential, NDBs are also facing many challenges. These challenges are internal challenges as well as external challenges. So we cannot overlook these challenges. And let me quickly talk about a couple of these challenges. First and foremost, governance of development banks matters a lot. Why? Because these are public institutions. They are dealing with public money. So therefore, NDBs need to be transparent and accountable, not only to the government, but also to all stakeholders and public at large. We have seen that the impact of a development bank is largely dependent on the quality of its governance. And I often give more emphasis to governance matters because we have seen all kinds of NDBs throughout the world. There are some good ones, there are also some bad ones, and some ugly ones. Let me give you a few examples of this diverse range of development banks from India. I'll start with the good ones, the success stories. In India, we have a subnational development bank that was the first one to provide seed capital to IT companies such as Infosys. Now, these Indian IT companies are globally competitive and they are earning billions of dollars in revenue every year. So right now, they don't need financial support from anybody else. But when these IT companies wanted to start their business, no commercial bank was willing to invest or to lend money to these IT companies, except this subnational development bank. So in many ways, a subnational development bank played a key role in nurturing India's IT industry. Now, let me give you a couple of examples of bad and ugly lending practices by some Indian development banks. In India, we also have a national housing bank. Its stated objective is to fund housing sector. It also used to regulate housing finance companies a couple of years back. Now, NHB has done a lot of good work. No one can deny that. But in the early 1990s, NHB gave 7 billion rupees to a stockbroker without any collaterals, who used this money to manipulate stock prices. That led to a massive scam in the Indian stock market. In India, we also have another NDB called HUDCO, the Housing and Urban Development Corporation. Now, if you look at the stated objective of HUDCO, that is the housing and urban development. Again, no one can deny that HUDCO has done a lot of commendable work. But the same HUDCO has funded a golf course and a 5-star hotel resort in India. Now, in a country like India, where millions of people are homeless, where millions of people live in slums, financing a golf course and a 5-star hotel resort should not be priority of any developmental bank. And that is not the mandate of HUDCO, but it did that. So the point I wish to make is that we need to learn the right lessons from all these positive and negative experiences throughout the world. And one important lesson is that the internal governance system of NDBs should be sound. All development banks should be transparent. By transparent, I don't mean that they should issue a press release every day, but their entire functioning should be transparent. I also believe that the NDBs should be strictly regulated and strictly supervised. And they should also engage with external stakeholders, such as academia, NGOs, and citizens. Currently, such engagements by NDBs are not taking place in India, I know at least, but also in many other countries. The second big challenge is related to the capitalization of NDBs. Except a few countries like Germany, China, Korea, NDBs in most countries are undercapitalized. My point is that if the governments can spend trillions to rescue private banks, they can also provide a few billions to NDBs. And if we want NDBs to upscale their lending, they need direct financing by governments. There is no other way. I also strongly feel that the NDBs need other kind of policy support. from the governments. For instance, there should be a very clear ownership policy of NDBs, because the government is both the owner of NDBs as well as the regulator of NDBs. So that may lead to conflict of interest in some situation, and we should avoid such situations to emerge. My next suggestion is that the NDBs should be actively owned and managed. We should do away with this passive management approach that we see adopted by many governments across the world. Also, the mandate of an NDB should be clearly articulated. Now, it is very likely that the mandate of a particular NDB may change over time, but it should be clearly communicated to all stakeholders. And my last suggestion is that we need a new scorecard. We need new indicators to measure the performance of NDBs. Currently, we use financial indicators such as return on assets, return on equity to measure their performance. But these indicators can only capture the financial performance of development banks. They cannot capture the total impacts of a development bank which is pursuing wider social and developmental goals. So therefore, we need to develop non-financial indicators to measure the broader impacts of development banks on society, on innovation, on jobs, on public welfare and environmental protection. And I have been making this suggestion for a long time, but I find that there is a little interest in the development banking circles to develop these new non-financial indicators that can holistically capture the wider impacts of NDBs. I'll conclude by flagging two issues related to the future of NDBs. First, the policy framework of NDB should be closely aligned with the broader framework for social justice and sustainable development. In other words, we need to promote greater policy coherence and interlinkages, which are often missing in many countries. And second, NDBs are currently gaining a lot of political support across the world. Now, this is a very positive development, and we should welcome it. However, even if this political support goes away in future, I strongly believe that the NDBs can still play an important role, provided they are well managed, well capitalized, and they remain committed to their distinct goals and core values. I'll stop here. Thank you.
Thank you very much, Kawaljeet, and that's a very good array of issues and suggestions that you raised for us, and we'll have time to look at it. I will now move straight to Maria Jose. Maria Jose, please, you have the floor, the virtual floor.
Thank you very much, Tete. Good morning, good afternoon, and good evening to everyone being with us in this session. My name is Maria Jose Romero, and I am a PhD candidate in development economics at SOAS, University of London. And since 2012, I work for the European Network on Debt and Development, leading our work on public development banks and development finance institutions. And Eurodad is a network of 49 organizations in 20 European countries. I am happy to be with you today. I think that this is a very relevant session, and the summit, the Financing Common Summit as such, is a very relevant opportunity to address some of the issues that Kawaljeet mentioned in his remarks. Today, I will focus my point on some specific concerns with regard to the promotion of an increased role of private finance in development, and what we see as critical actions in the current context. Finally, I will argue why we need a UN economic reconstruction and systemic reform summit to address the systemic problems that we identify in the development finance architecture. To begin with, the outbreak of the COVID-19 pandemic has exposed the negative impacts of decades of structural adjustment programs, austerity policies, and an increasing reliance on the private sector for the provision of public services like healthcare and education. Neoliberal and austerity policies promoted by the International Monetary Fund and the World Bank have undermined the capacity of public systems to deliver an effective and equitable way out of this crisis. These policies have also negatively impacted on social protection mechanisms that reach the most vulnerable. Access to healthcare today is often determined by income, gender, and geographical location, and these should be reversed. These institutions, the IMF and the World Bank, have also promoted the liberalization and the deregulation of different sectors of the economy, leaving countries vulnerable to the imperatives of private capital. And despite the negative impacts of this model, the most recent World Bank Group strategy called Maximizing Finance for Development implies a very problematic private finance first attitude to development finance. It is based on an unrealistic assumption that private finance will fill a so-called financing gap. Importantly, the approach coming from the World Bank in response to the pandemic shows the same pattern. And this pattern has been replicated by other public development banks. While it's true that the private sector needs support in navigating the fallout from the pandemic, the World Bank strategy in response to the pandemic is yet to produce concrete results. And despite the rapid response, the World Bank risks not reaching the countries, the sectors, and the companies that need support the most. And to make things worse, the World Bank Group strategy to build back better, again, replicated by other donors and institutions, also indicates a persistent promotion of controversial policies. We might be in a situation in which austerity policies are going to be with us very, very soon. And we are concerned about the centrality of the private sector in development in general and in public service provision in particular. And in the post-COVID-19 era, these will be compounded and even intensified by the limited fiscal space that developing countries are likely to face. So when it comes to the role of public development banks, they are sought to enhance the risk-return profiles of private money flowing into infrastructure and essential services. But this over-reliance on private finance has implications for the public purse and has also meant that human rights, social equity, and democratic governance are simply pushed aside. And this has to change. The evidence shows that there is very little empirical ground that private finance and public-private partnerships in particular are able to deliver on the promises of their promoters. It's a very expensive way of financing projects. It's a very risky way of financing projects, and they risk increasing existing inequalities. As a result, civil society organizations and academics as well have been calling on the risks that PPPs pose for the delivery of essential services. I would also like to stress what we see as critical actions going forward, because a lot is being said these days about emergency responses, but they won't be enough if they are not tied to long-term structural changes. And this is one of the main topics of this side event. The model that has put development finance at the service of private finance has to be reversed. And international financial institutions and the governments backing them will need to commit to debt cancellation. And this is one of the topics that, unfortunately, our colleague Lidin Akpil from APMDD is not able to raise today. I will say here that measures taken so far to address debt burdens for developing countries are not enough. And there is an urgent need for debt cancellation. We also need decisive action to end tax havens and to curb illicit financial flows, which would increase domestic resource mobilization and the capacity of countries to deliver the services that people need. This is another topic that our colleague Lidi was also supposed to share with us. In terms of the role of development banks and what we expect from them, it's clear that we need a shift from their development finance agenda away from austerity measures and market-friendly reforms. As World Bank president said in October, poverty is expected to rise in 2020 for the first time since 1998. And this requires an urgent and an ambitious response, both in terms of scale and of resources and policies. And that's why many civil society organizations have been raising calls to reclaim public development banks for the public goods. And as Kavaji said, for this to happen, for these institutions to serve the public good, their mandates, their business model, their policies, and the internal incentives have to be reformed to actually deliver on that. Unfortunately, the summit that is concluding today did not deliver concrete actions in this regard to match its otherwise very laudable ambition. And the follow-up process will be key to put words into action. To conclude, how we make all this happen, civil society organizations have been calling for an international economic reconstruction and systemic reform summit under the auspices of the UN, as the UN remains the only place where developing countries are at the table with equal voice. This summit should work towards a global consensus on a new economic architecture that could foster systemic reforms while promoting human rights, gender equality, social equity, and environmental justice. The summit should ensure democratization of global economic governance, recognizing the right of every country to be at the decision-making table, and not only those who has concentrated the power of resources. In practical terms, this summit, the summit that we are calling for, should create a framework for countries to have the policy space needed to regulate in the public interest and to ensure a feminist and just transition for people and the planet. Thank you very much.
Thank you very much, Maria. I would say that was a powerful representation that actually fits in very nicely with the points that Kavajit has been saying, because in fact, what we've argued is that the presumption of the capacity of the private sector to rise up to the challenge of our time is actually unfounded. And we have a problem where, in spite of the fact that they cannot rise, the whole way we approach financing is actually based on the private sector's imperatives, which actually constrain the public sector, and the role that the public sector can play, which Kavachi has completely aligned the different potentials that public development banks have, and also pointed out some of the critical issues that they have to address, including governance, transparency, capitalization, policies of support, and a framework for better owners. So I think that is a very good package of discussions. I'll now basically try and open the floor for our Q&A sessions to invite the conversations and discussion from participants and see what we can have. One of the first questions that I have input is whether or not there's any research so far on the impact of public development banks on democracy and the extent to which it strengthens and resistance to the inequalities that we have today or weakens it. I think it's a question that we think that can go to both of you can try. Basically, they want to know whether there's any research on the impact of public development banks. Right? So Kavajit and Maria, I think both of you can have a go at this question from the floor.
I'm not familiar with any particular in-depth kind of a study which looks into the impact of public development banks on the political institutions, the democratic institutions like that. I'm not very much familiar, but that's a very, very interesting aspect, which needs further research and further examination, because mostly we have been, analyzing the role of public development banks in the economic sphere, how they operate and what kind of things they do, the role they play and their importance in the economies. But the political institutions, at least I haven't come across any such study which closely examines the kind of role they play in the political institutions of a particular country or a group of country or a group of countries. But I think that's very interesting. That's very fascinating issue which should be examined, and I would be very happy to collaborate if somebody undertakes that kind of a study. And let's see if we could do it in future.
Maria, what do you think?
Thanks, Tete. I definitely agree with Kavajit that this is a very relevant topic. I am not very much aware of specific research on this point either. I would say that the focus so far has been on how the governance of public development banks can actually contribute to how the institutions deliver on their development mandate, right? So there has been different reports that point to the fact of these institutions having a more participatory governance structure or specific policies that ensure accountability and transparency, etc., and how these actually contribute to the institutions delivering on their development mandate. This would be my take. Thank you.
Actually, yeah, I think that actually links back to a point that I think Kavajit made earlier, that in fact one of the critical areas that have to be addressed if the public development banks are going to realize their potential is a question of governance and its scrutiny, because it's governance the link between economic substance and the role of the public and different players and the ability to change the political culture. Which ties in very interestingly to the next question that again is addressed to both of you. Our colleague says that in his view, and I assume that it's a man, forgive me if it's not, Farhad Zulfikar Ali, he says that in his view, the majority of public development banks in poor and developing countries have miserably failed due to bureaucracy and red tape. And so what guarantee do we have that this model of public development banks will be able to sidestep the problems of red tape and bureaucracy in this future development? Again, as I say, it connects something that both of you are saying. Kavajit, and then again,
Okay. Very relevant question, very important question, because whenever you talk about public development banks, these issues are being raised that, what about red tapeism, what about bureaucracy, what about corruption? In India, we call it phone banking, which means that a phone call comes from the top of the political establishment and it goes straight to the to the senior management, and they are asked to fund a particular project, whether that project is viable, whether that project has, should be financed or not. So this is a very relevant question, and I come from India. As I said earlier, in India we have seen all kinds of development banks. So the potential of this failure is always there. But I would also argue that these issues are not just limited to public development banks. Same issues also apply to private sector banks. In India, we have very efficient state-owned development banks. We also have very efficient private banks, commercial banks. We also have efficient cooperative bank, the local bank. So the ownership has little to do with the corruption, with the red tapeism, and other problems, which are generally associated with the public institutions. And our Reserve Bank of India, our central bank, did a study, and they found that these problems exist across all banks. And in India, not just some of the state-owned banks have failed, even some of the private banks have also failed because of the similar problems. So these problems are not just limited to public sector banks. I think two things, which are required, very, very important. One is the internal management, the internal governance structures, the accountability mechanisms. So that is very important. But external is equally important. The regulation of all banks, whether private or public, that is very paramount. And I come from India. In India, we have very good regulations, but most of these regulations often remain on paper. These are not implemented because there is a problem with the supervision. And why there is a problem with supervision? Because there's not enough staff with our central bank to supervise, to see whether the banks, whether they are state-owned or privately owned, whether they are following these regulations or not. So potential of failure remains across all banks. It again depends on the internal as well as the external. So that is why I was arguing that there has to be a balance, an appropriate balance between the internal and the external equilibrium. And that is why the role of external actors becomes very important. The role of academia, the NGOs, who keep monitoring these banks, the public at large, the external auditors. These are very, very important, factors that would decide whether a bank will fail or not, rather than the ownership.
Maria, I'll ask you to contribute, but we have got another question which is quite slowly related. So, as you are contributing to that first question about bureaucracy and red tape, can you also, take on board this next question about how to make public development banks accountable to the people and to be aligned to the democratized vision of development, as it were, right? Instead of, because the person who's giving the question gives an example of how at the moment there's a number of development banks which are promoting PPPs, for instance. So there's a question of the coherence between those development banks and the vision that we're talking about, the accountability to the people in a particular vision. Can you take this on board, even as you're saying, and then we can come back to Kavajit again for a review on that. So Maria, please.
Yeah. Thank you. Thank you very much. The questions that are coming are all indeed very, very relevant. I could address the one on accountability, but first I would like to add to what Kavajit said in relation to the experience so far with national public development banks, because it's clear that in some countries these are contested institutions, but it's also clear that they are also dynamic institutions, and different societies have fought and succeeded in making these institutions better institutions, and I would just like to highlight a couple of examples just to show that it's possible to have institutions that are regulated and that work under other imperatives, right? So in response to popular and political demands, the Nordic Investment Bank, and this is just one example, made decarbonization part of its core mandate. The second example, the Costa Rican Banco Popular y de Desarrollo Comunal is bound by its 2002 democratization law, which formalized broad-based and gender equitable decision-making. And this point goes in response to the second question. It's possible to have institutions with other ways of including a broad base of stakeholders before, during, and after project implementation, particularly for the monitoring phase. It's about how these policies are set to consult local communities and to actually, as I said, include them in the way in which projects are formulated and implemented. So this would be just one example. And of course, free, prior, and informed consent. It's also a relevant way in which public development banks working at different levels, not only at national level, but at different levels, can make their policies and their projects more accountable and in line with the demands of local communities. And these are just a couple of remarks on these. Definitely the democratization and the transparency and the openness of public development banks at different levels is key for their ways of responding and delivering on their development mandate. I would leave it like this. Thank you.
Kawajit, do you want to add something to this thing about getting them to be coherent to their vision of the people, the democratic development, public development bank?
Very good question. Frankly speaking, I don't have any blueprint to say that this is the way they should be made accountable. But I think we can talk about the general principles, because the institutional context vary from country to country. In India, for instance, to give you an example, in India, we have the right to information. So we can seek information, let's say, from the public institutions, and public development banks are part of that. But there may be other countries, where such right to information, such rights don't exist. So in those countries, they will have to devise different strategy, how to make them accountable, how to seek more information. So the institutional context, keeping that institutional context in mind, I think we can generally talk about the broad principles, to make them accountable to the people. There are ways to do that, and it has been tried across many countries. One way is that the board of a development bank, how that is constituted. There was a time when the board of the development banks only consisted of bankers and the government officials, the bureaucrats. There was hardly any representation of academia, particularly those academia who work on banking and financial issues. They were never made part of the board and the decision-making process. So I think one can look into how these the boards and the senior management can be used to open up. Also, there are very few development banks, which hire sociologists, anthropologists, and other, other people, other professionals,
So sorry, I mean, this is very interesting, but I want you to tie in something because we've got 5 minutes left. And there's a question on the floor which I think can tie into where you are going for both of you. And the question is just one thing I think is important to pick. Are we aware of any models of PDB or what they are doing, public development banks now, that are responding at the local and regional level to some of the problems of COVID and how they are being mitigated? I think that concrete examples to that question can also tie into some of the things you have said. So maybe as you are running up that question and your answers, Kavajit, can you spend a minute or two wrapping in that in examples of intervention by public development banks, the question of COVID, and then we can go to Maria also, because we've got only about 4 more minutes left for our session. Thank you.
Okay. Very briefly, in India, at least I know a couple of development banks which are involved in the rural development and agricultural issues. They have increased their lending in the rural areas. And because of the long lockdown, implemented in India, a lot of migrant workers from urban areas went back to the rural areas. So these development banks have increased their activities, their lending in those particular areas, where a lot of migrants have come back. Although it is not of that scale, but we would, expect, but at least some efforts are being made as far as the economic recovery, as far as the, helping people who have been, whose jobs have been lost or whose, economy has been devastated by the pandemic. Regarding the health aspect of pandemic, I'm not very familiar, what steps development banks have taken so far.
Okay, Maria, was it?
Yeah. Thank you very much. It's a very relevant question, and as you said, help us to wrap up our remarks. Given that Kavaji already focused on the response or on some of the points from national development banks, I will be focused on regional public development banks and institutions, global institutions. I would say that here it's very important to avoid some of the problems that we identify in the pre-COVID phase. And as I said, in some of the responses that we are analyzing and seeing these days, we are identifying the same problems as before. So there is an over-reliance on the private sector and on the financial sector to get us out of the crisis. There is quite a lot of investment in commercial banks, in private equity funds, etc., with the hope that these will end up benefiting small and medium enterprises at the national level. But this is still to prove the results. And when it comes to how public development banks at different levels are supporting countries to get out of the health crisis, here is important to support public health systems, the strengthening of public health systems, instead of supporting private healthcare companies that will indeed end up undermining the universal health coverage, etc., and increasing inequalities. So here I also tie to the question that referred to the use of public-private partnerships and the promotion of public-private partnerships. Here, we have to see public development banks in a more active attitude towards analyzing the risks and the problems that might come with PPPs for the public purse and for people and for human rights. On the basis of that, they will have to promote or support a specific financing mechanism, which are indeed not neutral. Thank you very much.
All right. I mean, there's a lot more questions I hear, and there's very interesting conversations, but unfortunately, we've got only 30 seconds left. It's my time to summarize and re-emphasize the point that this panel has made a strong case about the relevance of public development banks in their way to the potential in a situation which is much more beyond what our assumption about private sector could do. And we have pointed out the way of their capitalization, governance, and the ability to actually look beyond and help to think through the strategic questions that we face in our times. I can only say thank you very much to all of you for at least the time that we have had to raise some of these issues, and thanks for our audience and for the interesting questions that have been raised. And I'm very happy to have been your moderator for this section. Thank you very much.
Thank you.
Thank you very much.
Everyone.